Understanding market structure on smart money concept. Before we dive deep into the institutional style of trading, we need to know some basic concepts in Forex. Joining these basics with the institutional style of trading will actually enhance your trading style so much more. This is actually what brings us to the concept of market structure. Firstly, we will be talking about market structure. Market structure is the simplest form of price movement in the market, and it's important to be able to read it. Market structure is also sometimes referred to as price action. So we call it market structure because that's how the whole market moves. You have to know which way the market is going to be able to make a nice winning trade. We have two features of market structure. Number one, trending market. Number two, ranging. The trending market can also be called the impulsive phase or the expansion phase, or the distribution phase of the market. While the ranging market can be called the consolidation phase or accumulation phase or contraction phase. Take a look at the image here, for instance. The market is in an uptrend here, and then the market makes a bit of sideways movement here before continuing to the upside. The uptrend here can be called the impulsive phase or expansion phase or distribution phase. Also, the sideways movement here can be called the contraction phase or accumulation phase or consolidation phase. In a simple form, a trending market occurs when the market is in an upward or bullish move, or when we are in a bearish or downward move. The ranging market is simply a sideways movement. In an uptrend or bullish trend, we usually have a series of higher highs and higher lows. Higher highs are abbreviated as HH. Higher lows are abbreviated as HL. In a downtrend or bearish trend, we usually have a series of lower lows and lower highs. Lower lows are abbreviated as LL. Lower highs are abbreviated as LH. It's essential to follow the market structure when you trade. You have to know which way the market is going to be able to make a nice winning trade. For instance, when you see that the market is making a series of higher highs and higher lows, you will know that the market is in an uptrend, and you won't want to trade against the trend. Also, when the market is making a series of lower lows and lower highs, you will know that the market is in a downtrend, and you won't want to trade against the trend. Also, what is very important to know and remember is that the trend can look different in each time frame. For example, if you look at the daily time frame, the trend can mainly be an uptrend. But if we look at the H1 time frame, we may see mainly a downtrend at the moment. I will also like to talk about the break of the market structure. For instance, in an uptrend, you have a series of higher highs and higher lows. If the higher highs here pull backs and break below the previous higher low here, then we can tag this zone as a break of market structure, abbreviated as BOS, and we can name this point as a lower low because it's lower than this previous low. Take a look at an example on the chart here. Also, we have an example of a break of market structure in a downtrend. Here we can see price creating a series of lower highs and lower lows. And here, price made a pullback and broke above the previous lower highs. Now, we can mark this zone as a break of market structure BOS, because price has printed a new high, higher than the previous lower highs. We can tag it as higher highs. That is, it's a high higher than the previous high. Take a look at an example of a break of market structure in a downtrend. Let's look at some typical examples on the chart for an uptrend and downtrend formation. The market created a low here before printing the high that we can see here. Price went down, created a low that is higher than the previous low. We can tag it as higher low. Price created a new high here, which is higher than the previous high. We can then tag it as a higher high. Price went down, created a low that is higher than the previous low. We can tag it as higher low. This is another higher high. Here is another higher low. You can see that the market structure is bullish because it continues to print a series of higher highs and higher lows without breaking below the previous lows. This is a bearish structure example. The market created a high here before printing the low that we can see here. Price went up, created a high that is lower than the previous high. We can tag it as lower high. Price created a new low here, which is lower than the previous low. We can then tag it as lower low. Price went up, created a high that is lower than the previous high. We can tag it as lower high. This is another lower low. Here is another lower high. You can see that the market structure is bearish because it continues to print a series of lower lows and lower highs without breaking below the previous highs.